Understanding Private Limited Companies, Pvt Ltd. This document provides an overview of private limited companies, Pvt Ltd, a popular business structure for small and medium-sized enterprises, SMEs. It highlights the key advantages and characteristics of this business model, including limited liability, separate legal entity status, flexibility in management, tax benefits, and perpetual succession. Additionally, it outlines the requirements for shareholders, directors, registration, and filing obligations. Advantages of a private limited company. Limited liability. One of the primary benefits of a private limited company is limited liability. Shareholders are only liable for the company's debts up to the value of their shares. This means that personal assets are protected, and shareholders are not personally responsible for the company's financial obligations. Separate legal entity. A private limited company is recognized as a separate legal entity from its owners. This allows the company to own property, enter into contracts, and conduct business in its own name, independent of the shareholders. Flexibility. Private limited companies offer flexibility in management and operations. They can raise capital through the issuance of equity shares, allowing for growth and expansion without compromising ownership control. Tax benefits. Private limited companies are subject to corporation tax on their profits, which can be advantageous for owners. This structure can help protect owners from higher personal income tax rates, allowing for more efficient tax planning. Perpetual succession. The existence of a private limited company is not affected by changes in ownership or the death of shareholders. This concept of perpetual succession ensures that the company continues to operate even if all members pass away or if the company faces insolvency. Characteristics of a private limited company. Shareholders. Typically, a private limited company is limited to a maximum of 50 shareholders. Additionally, shareholders cannot trade their shares publicly without the consent of other shareholders, which helps maintain control over ownership. Directors. A private limited company is required to have a minimum of 2 directors. These individuals are responsible for managing the company and making strategic decisions on behalf of the shareholders. Registration. To operate as a private limited company, it must be registered under the Companies Act 2013. This registration process formalizes the company's existence and provides it with legal recognition. Filing obligations. Private limited companies are required to file annual financial statements and hold regular meetings. They must also submit income tax returns and pay taxes on their profits, ensuring compliance with regulatory requirements. Conclusion. In conclusion, a private limited company offers numerous advantages and characteristics that make it an attractive option for small and medium-sized businesses. Understanding these aspects can help entrepreneurs make informed decisions about their business structure.